Hi friends, welcome back again. IRFC, Indian Railway Finance Corporation Limited, the borrowing arm of Indian Railways, which means IRFC's main business is to raise or borrow funds from financial markets, mainly by issuing bonds, and uses that fund to manufacture railway rolling stock. And what this railway rolling stock is? Simply, this term, railway rolling stock, refers to both powered and unpowered vehicles used in railways, which includes locomotives, coaches, wagons, cranes, containers, trolleys, and so on. Or you can say, the main operating assets of railway industry. So IRFC borrows money, uses that money to manufacture these rolling stocks or assets, and then they give them to Indian Railways. But not for free. They give them on lease, and in return, IRFC receives rent on half-yearly basis. That is, they receive rent twice a year. Thus, if we look at the business model of IRFC, in the most simplest way, they raises money at a very low interest rate, manufactures something, leases them out, and earns a healthy rent amount. And the difference of this rent amount and the interests to be paid to lenders is their profit. And recently, they have announced their annual result for financial year 2021. And they have achieved an exceptional all-time high revenue and profit numbers. As revenue increased from 13,421 crores to 15,770 crores, about 17.5% growth in revenue. And profit after tax, that is PAT, jumped from 3,192 crores in financial year 1920 to 4,416 crores in financial year 2021, a huge 38% increase in profits. Not only that, net profit margin have also increased from 24% to 28%. And do you know, total capital outlay or capital expenditure that was set by Railway Ministry for financial year 2021 was 1,55,161 crores, and IRFC achieved about 67.5% of this target, which is 1,04,369 crores, and this figure is known as company's total annual disbursement. And you'll be happy to know that this annual disbursement was just 70,471 crores in financial year 1920, which shows an unbelievable growth of 51% in annual disbursements in a single year. And to celebrate this huge profit of 4,416 crores, they have announced to distribute about 31% of this amount, which is around 1,372 crores in the form of interim dividends among its shareholders. Wow, very happy, right? But Government of India is much more happier than you, as their holding in the company is about 86%. Thus, 86% of this 1,372 crores, that is 1,180 crores, will just go into the pockets of the government. So what do you think? Can IRFC become a multi-bagger, same as IRCTC? By looking into this excellent 5 years sales growth of 16% and 5 years profit growth of 39%, and the stock trading at such a low price of just 24 rupees, it seems that it might become a multi-bagger. The stock price may just zoom to the upside, same as IRCTC. But no, according to me, this might not happen in case of IRFC. And there are some valid reasons behind this. In the next few minutes, we will discuss few reasons which can stop IRFC from becoming a multi-bagger. So listen very carefully. Firstly, IRCTC's IPO saw an excellent listing, giving listing gains of more than 100%. Had you applied for this IPO and doubled your money in just one day? But IRFC's IPO was a flop as it got listed below its issue price and gave negative 4% return. Secondly, government holds 67% in IRCTC, whereas government's stake in IRFC, as I said before, is 86%. And according to the rule, promoter of any listed company cannot hold more than 75%. So, government have to dilute more shares in the future, and hence supply will increase, which can further lead to the downfall of IRFC price. Most importantly, IRFC is heavily dependent on Indian railways for making profits, and any downturn in the railway industry of India can also bring down IRFC. And lastly, the share price of IRCTC just flew to the upside with large gap up days, showing that big players have already taken position in the stock. And if we see the chart of IRFC, we can see that the stock is still below its IPO price, and no sign of big players showing interest is seen in this stock. And you can see that the stock had a strong resistance at around 26 rupees. So, don't just buy it only because of excellent fundamentals. Wait until it breaks strongly above that resistance of 26 rupees. And then only some momentum can come into this stock. So keep a close eye on this stock, as if the stock price closes strongly above this resistance of 26 rupees, a huge momentum can be seen coming in this stock, and the stock can just fly away. It might not become a multi-bagger, but you can surely make some excellent profits if you can enter at the start of that momentum move. That's all for today, guys. Please hit the like button because it motivates me to do more of such insightful videos which can protect you from making losses. And subscribe our channel if you want to achieve financial freedom. I am Viswas and you are watching FinTech Funda, and our aim is to make you achieve financial freedom through technical and fundamental knowledge. Thank you.